Hey guys, welcome back. In this episode, I'm going to show you the easiest way to know if Bitcoin is in a bull or a bear market. In other words, do we expect Bitcoin's price to go up or down in the near future? I'm also going to show you how I adjust my trading and investing style based on if we're in a bull or a bear market. So if you're new here, welcome. My name's Chris Dunn, and I've been doing Bitcoin videos since 2013. And the reason why I do these videos is to help people become wiser and more disciplined investors and traders. And I'm constantly seeing a lot of confusion on social media and online from people trying to figure out if Bitcoin's price is going to go up or down. And I have a very simple, objective way that you can look at a price chart and figure this out very quickly. So before we dive into that, first a disclaimer, I'm not a financial advisor. This is just for education purposes, so please don't buy or sell anything based on what we talk about in this video. So let's start by talking about a few facts. And for those of you that aren't familiar with the terminology bull market or bear market, think of a bull. You know, when a bull hits, it's going up with its horns. That's why a bull market, and when people say something is bullish, they're expecting prices to go up. And a bear market, think of a bear coming down with its claw. And when somebody says they're bearish, they expect prices to go down. That's what that means. It's a pretty silly analogy, but it works across all financial markets. And specifically with Bitcoin, since Bitcoin started trading on exchanges around 2012, we've had three major bull markets. So three longer periods of time where prices have gone up on average. And we've had three major bear markets where prices have decreased in value over time. And instead of trying to wake up every day and figure out if prices are going to go up or down today, the smartest traders and investors will try to figure out what is the trend over several days, weeks, months, or years. And that's what I try to figure out what's going to happen in the near future, midterm, and longer term. Okay, so let's talk about how to figure out if we are in a bull market or a bear market. And what we're looking at here is a daily chart. So this is my favorite chart to look at with Bitcoin. Is every candlestick here represents one 24-hour period of time. And there's really two things that we look at to keep this very, very simple and objective so there's no guessing. Number one is we look at some moving averages. We look at the 100-period moving average, which is this kind of orange line here. And we look at a 200-period moving average, which is the blue line. So what that means, a moving average, if you don't know, is you take the average price over the past 100 days, and that gives you this kind of smooth line, right? Or a longer period. So if you take the average price over 200 days, you get the blue line, and that's a much slower moving line. The second thing that we look at is price structure. Okay. We look at pivot highs and pivot lows. And let me explain what that means. You can see where I have these circles. These are basically pivots in price, where price is going up, it reverses, you have a pullback, it goes higher, you hit a top, it reverses, you hit a low, right? So price in any market doesn't just go up or down. When you're trending up, you'll have runs to the upside, and then you'll have retracements to the downside, and then you'll have what we call extensions or continuation runs to the upside. And prices do this kind of stair-stepping pattern to the upside. And there's a bunch of different kind of technical analysis tools that you can use to try to measure this stuff, but I'm going to keep this video very, very simple. And the same thing is true when you're looking at a bear market. You'll get runs to the downside, weaker retracements back up, or you could call these dead cat bounces, and then extensions, which ultimately lead to even lower prices, right? So if we look at just some current history here from, most of like 2019 and then into 2020 here, you can see we had a run to the upside, a pullback, a run to the upside, and we were making higher lows. So if you look at the pivot lows in price, they're going higher, right? So we would call these HL, so higher lows, and then we also have higher highs, right? So whenever you're looking at the pivot highs, if they're leading higher and the lows are also leading higher, and you are above both moving averages, you could say that you are in bull territory or you're bullish. You expect prices to continue higher over time, right? And the opposite side is true, is when once we reverse and we get below both the orange line and the blue line, and we start making lower highs. You can see right here, we have a lower high than this pivot high, and then a lower pivot low. So we've shifted. So we got below both moving averages, and we have lower highs and lower lows. You could call that bearish territory, or we're in a bear market. So a couple things to keep in mind about this is, number one, this form of analysis is not meant to help you pick the exact bottom in a market and the exact top. Its goal is to try to keep you on the right side of the market in general over time, right? And then once you understand if you are bullish or bearish on a market, then you go in and you look for trade setups, and you start thinking about risk management, and you look at candlesticks for entries, and there's a whole slew of next steps that comes into that. But the biggest thing that I see trips up new investors and traders is they're just confused of like, hey, do I have a bull bias or a bear bias, or am I just completely confused? And so anytime I sit down to look at the markets, this is where I start. This is where I say, okay, are we bullish or are we bearish? And then based on that, that will affect my decision-making process after that. So let's do this. I want to go back and look at several years worth of data and just show you how well this works. So let's go back. If you look at Bitstamp on your chart, Bitstamp, I believe, has one of the longest price histories that we can pull up in Bitcoin. And you can see really that early on in 2011, there wasn't much trading activity happening with Bitcoin. It was really, like mid 2012 that we started to get some real volume on exchanges. And this is where what I call price discovery actually started to happen. And you can see that's actually where prices started to pick up too, right? After it broke out of about $5, it went up to 15 or 16 and then had a pullback and then consolidated. So if we say that this bull market really began here around mid 2012, you'll notice that price action actually respected, once it started making higher highs and higher lows, it started using both moving averages as support. So every time it would get above it and pulled back to it, it would bounce off of support, right? So you can see higher pivot highs, higher pivot lows were above the moving averages or using them as an area of support. And that continued all the way through late 2013. Okay, so this first bear market, if we just look at the timeline here, this was about 650 days or so, or about 1.75 years in that first bull market. And there was about a 20,000% max bull market gain, meaning from where the bull market started to the pivot high here in 2013, there was about a 20,000% price increase from the $5 mark or so. And then there was also about a 10,000% gain until the market shifted. So even if you didn't pick the very top of the market, if all you did was close your position when we shifted into a bear market over here in 2014, there was still about 10,000% worth of price gains during that time. So it was about half. And pay attention to that number because you'll see that actually repeat itself. And then here in mid 2014, you can see we actually got below both moving averages and started to put in lower lows and lower highs. And you can see that this bear market actually lasted also similar to the bull market, lasted about a year and a half. And there was about a 78% price drawdown from where the bear market actually started. Okay. So again, you get these really big explosive moves to the upside, and then you get these really, really deep pullbacks here. And this one, again, it also lasted about a year and a half. And then in late 2015, when we started making higher pivot highs and higher pivot lows, and we got clearly above both moving averages. And you can see there was some choppiness here in 2015 when price was accumulating. I've done videos on this in the past, but when price is in accumulation mode, it can actually get kind of choppy. So this form of analysis with looking at pivot highs and moving averages really only works when the market is trending. If it's just flat and choppy, all that goes out the window. But thankfully, Bitcoin has been very, very predictable with these types of moves so far. And you can see, so this bull market started in the end of 2015. This is bull market number 2, and began to make runs and retracements and making pivot highs and pivot lows that are higher each time, using, again, the moving averages as support over time. And you can see this one lasted even longer. So if we zoom out here, this bull market lasted about 2.5 years, or about a 65% 100 max gain to the highs up here, just shy of 20,000 in 2017. Or if you waited until the market shifted, you still got about a 3,000% price gain. So again, about half of the gains from the max peak highs, right? So again, investing and trading isn't about trying to pick the exact low and the exact top. It's about staying with the trend until it shifts. And then you can see the bear market began over here. Once we actually had a really fast pullback, got clearly below both moving averages, started making lower lows and lower highs. And you can see through here, there was about, this bear market through 2018 lasted about a year. And this was also about a 70% max drawdown from after the bear market began. And then in early 2019, we had our third bull market, which this was the shortest of all time. This was only about a half a year, and there was about a 200% max gain from when we broke up above the moving averages and started to shift and make higher pivot highs and higher pivot lows. And then there was about 100% gain. So again, about half the gain from when the bear market started right over here. Okay. And then you can see right now where we are currently in January 2020 is we are making lower pivot highs, lower pivot lows, and we are below both moving averages. So the interesting thing right now is we actually have, in 2020, we have another halving. And the halving is where every 4 years, the block rewards, meaning the new Bitcoin that comes out every 10 minutes or so, gets cut in half. And so that limited and continual decrease in new supply is fundamentally bullish on the price action, meaning the less supply you have of something, inherently the more valuable it becomes if the demand remains the same or grows over time, right? It's kind of like if you look at US dollars, they keep creating more and more and more. And that's why that's why we have inflation, and that's why your dollar buys a little bit less every single year, right? Or with Bitcoin, as the supply continually decreases, or the new supply continually decreases over time, that is inherently a driver of higher prices over time. Now, again, that's not to say that Bitcoin's price is just guaranteed to go up over time forever. The demand still has to be there for it. But as you can see, since 2012, prices have been growing steadily, even through these big boom and bust price patterns. And here's the way that I personally trade and invest based on market structure and if I'm bullish or bearish. So I adjust my risk management and the amount of trades and the type of trades that I'm taking during these time periods. So if we're in a bull trend, I am more aggressive with longs, meaning I will trade bigger position sizes. I'll be more patient for profit targets, you know, that old cliche of let your winners run. And I will be more liberal with my stops, meaning I'll let the trades work and I'll give it more room before I cut off a loss. And then I'll also be more conservative with shorts. If we're in a bull market and prices are going up over time, why am I going to fight that? And the same is true with the bear trend. I'm going to be less aggressive with longs. Like I'm not going to look to, you know, if prices are falling and we're getting lower lows and lower highs, I'm not going to just average down and try to catch every falling knife and then just keep watching my account bleed out, right? That's unfortunately what a lot of people do, though, is they have hopium and they're like, oh no, prices have to come back tomorrow, right? And they get impatient and then they end up wondering why they blew out 80 or 90% of their investment capital, right? What I like to do during bear trends is either entertain shorts as a hedge, meaning like you can open up a short position to make up for the losses that you're incurring on maybe Bitcoin that you're holding in your cold storage wallets or something like that. Or you can actually become net short, meaning you can be net short. Even if you're holding Bitcoin somewhere in an account, you can open a short position, meaning you're betting that prices are going to go down, that's larger than your existing holdings, which you could actually end up with a net profit if prices go down over time. And that's why I love Bitcoin so much, is it's so volatile. So as a trading asset, it's just really nice to trade. And also as an investor, it's been a great market to invest in over the past 7 or 8 years. So guys, I hope this video was helpful. Again, my goal is just to help people become more wise and disciplined investors. And if you like my videos, if you want to get notifications of future videos, make sure to get on my email list, which I'll link up below, because if you've been watching any of my prior videos, you know that YouTube has been on an all-out assault against crypto channels and really anything that they deem non-commercially viable. They've been taking down and demonetizing people in all kinds of markets. And so not only have I decentralized my videos on some of the decentralized platforms, but I'm also creating an email list for people that want to get all my content. So there's not going to be any spam or anything there. It's just for any podcasts or videos or live classes that I do. So I'll link that up below. Also, before you go, question of the day: what is your favorite tool or form of analysis when looking at Bitcoin's price? Are you technically driven? If so, what's your favorite charting tool? Are you fundamentally driven? If so, what kind of analysis do you like to use to try to figure out what price is going to do next? Or do you look at market sentiment? Do you look at social media or the news and try to counter trend trade or do something like that? Let me know. I'm really curious about what you guys are using out there. So again, hope this was helpful. I look forward to seeing you in the next video. Take care, guys.